All right, and up next is Julian Zamboko, who has a sit down with the CEO of Absa on their half-year results. Let's take a look.
We are here to talk about matters regarding the banking sector earnings, and Absa has released numbers for the half-year ended June 2023. We're delighted to have the Group MD CEO, Abdi Mohammed. Thank you so much for your time.
Thank you, Julius. It's very good to see you again.
Asante sana. Abdi, this essentially marks the first set of earnings, not just for you, but for the new strategic outlook the business is taking. And maybe let's just start from that point. How do you feel the 6 months in review have been?
We're very pleased with what we have put in front of the market. Strong growth in balance sheet, strong revenue growth, a very well managed picture on the cost side, and therefore significant growth on profitability. It's early days, but it clearly shows that the strategy that we've put in place and our executional approach is working and is delivering results. So this is something that we're really, really pleased about.
Looks like a compelling takeoff, but Abdi, if I look at the numbers and I strip the half-year earnings between Q1 and Q2, it really looks to me like there was a bit of tapering off of momentum in Q2. Q1, your net earnings were up 52%. Aggregate H1 is looking at about 32%. It looks like there was a deceleration in Q2. Maybe just give us some context around the operating environment.
When you look, Julian, at the quarter on quarter, you're right. But this is a comparison to prior year. And therefore, what you will see is that in the quarter one of 2022, the numbers were fairly depressed. And Q1 this year compared to 2022 was an aggressive percentage. However, last year had that hockey stick effect. Yeah. And therefore, we had better performances as the year progressed. So it's a relative deceleration. But when you look at the absolute numbers, and the numbers we're putting on the balance sheet in retail, in corporate, in business banking, there is absolutely no deceleration. There is very good momentum in the numbers. It's the comparison with prior year that presents, some of these numbers. Of course, on the cost side, good improvement. On the impairment side, we took a few forward-looking kind of numbers into the P&L to be on the conservative side and ensure that our coverage ratio remains good.
I see. And speaking about the growth of the business, just looking at your loan book, up by a significant margin, and I've always had this conversation with Absa executives. When you look at your loan to deposit, quite high by industry standards, and I'm curious at this particular point, when you look at it from a currency denomination standpoint, where is the throughput coming through significantly? Is it local currency? Is it USD?
The asset growth is driven by some of the key sectors of the economy that have grown. And if you look at the Kenyan macroeconomy, for example, tourism is experiencing a very good recovery. We are seeing very good recovery in agric production, which has actually helped the country's inflation number as well. We're seeing diaspora remittances and payments going up. And those sectors drive some of the asset growth that you are seeing. We've also put significant debt into the SME business, and we're helping small and medium enterprises in their growth journey. Currency-wise, it's both dollar as well as local currency. The loan-to-deposit ratio is one that is trending downwards if you compare last year's numbers to where we are now, both in local currency as well as the overall picture. That number is coming down. We do sometimes take a call when it comes to funding, especially taking into account the cost of funding. We do take a call sometimes on whether to fund from our group or elsewhere, or whether to fund through local deposits. But that's normally, a one-off decision.
I see. And one of the issues which a number of players in the industry have struggled with in the period under review is how to grow your deposits in a very strong manner in an environment where something like an infrastructure bond is giving 14% upwards. Yeah. Maybe just help us understand how you have managed to pull this through in the half year.
So, you know, when you look at this funding on the liability side of the balance sheet, there is funding that is price sensitive, where you go out to the market, and in that sense, the competition is with all the instruments that are out there. But there is funding on the balance sheet that comes out of organic activity, work that you are doing with clients out there, the type of tools that you deploy from the digital side, what is the strength of your capability to collect funds on behalf of customers, what's your capability to submit payments locally, payments globally, and the more of that you are able to do, the more likely you are to raise deposits, you know, sort of at a grassroots level, so to speak. The branch network does support that initiative. We've deployed a lot of tech-enabled, you know, solutions out there as well. The cash depositor machines is a good example that helps us provide these solutions to customers at their point of work. And this helps raise low-cost deposits that then help us to deploy on the asset side of the business.
Okay. And looking at the quality of the loan book, I've seen you have ramped up provisions quite a bit. Not anything unusual. The industry, I think, is taking a very cautious stance going forward. And just curious as to your view on the credit risk in this market, at least in the period closing in 2023.
Ultimately, what you want to do, a very big chunk of our work as a banking sector, is to ensure that the credit we put out into the market is good quality credit. So there is a responsibility on our part to ensure that we have the right policies, that as we support these various sectors, we are providing solutions that work for that customer base. And that's a big responsibility. And you will see that in Absa, we take that responsibility very seriously. We ensure as much as possible. At the end of the day, there is always an element of risk. But as much as possible, we are supporting customers, we are advising correctly, and we are providing solutions that work. So up until this moment, we've been in single digit in terms of the NPL ratio. We are still 400 or so basis points below the industry average. We still want to drive it down. We still want to work on the quality of the book. But, you know, as you say, wherever there is strain and this changes quarter on quarter, we then take a very conservative view. We take a forward-looking view, and to ensure that we have the right coverage ratios, sometimes we take a conservative decision. And that's what we did in Q1 of this year. But you will see, as the year evens out, already in the H1 number, that continues to improve, especially as we upscale and grow the asset book in its totality.
Okay. And still on the quality of the loan book, where is, in the period under review, where did, would you say the hits came largely from FCY or the shilling side?
It's again a combination. It's a combination both on the FCY side as well as the local currency side. And remember, these are mostly general provisions that are taken you know, with a forward-looking macroeconomic picture, and some of them are not specific. They are not name-specific, and there are a few name-specific ones as well.
Okay. I sat down a year ago speaking about Absa earnings, and one of the issues which I raised was at the time the industry by and large was really riding the tide of foreign exchange trading income. And my question was, what happens when this tide recedes? And if you look at the numbers you just put out, clearly last year you were 50 plus year on year up, currently in the 20s. Do you feel this tide is receding, the market is normalizing?
I think ultimately, Julian, what you want to do as a bank is to ensure that you have a balanced portfolio and you have a balanced revenue picture overall. And this is something that we've worked very hard on in Absa, to ensure that we are not reliant on any specific stream in a concentrated kind of manner. And when you look at the numbers that we've just shared, it's really right across the business. Retail banking growing double digit, business banking growing double digit, corporate and investment banking growing double digit. The FX piece is part of that. We continue to work with not just ourselves, but industry partners, Kenya bankers and others, to ensure that first and foremost we are supporting numbers we've shared. As you say, it's still early days, and therefore in terms of contribution to the total revenue, it's still somewhere below 10%. But in terms of year-on-year growth, those areas, those new business streams, the bank assurance, the asset business, are showing 100%, 70% type of revenue growth. So it's an early indication, but it clearly shows those income streams are areas that we should be focusing on, that we should be driving as we diversify the bank. At the end of the day, the picture or the vision that we have for the bank is to be a financial services provider that covers not just banking, but across the financial services sector, either through partnerships or through direct provision of the service by ourselves.
Okay. Speaking about these new income streams being at under 10%, where would you like them to be in whatever horizon you have in mind?
I think we want their contribution to continue to be more significant. At the end of the day, you have to remember that we are still a large corporate bank, an investment bank. We're still a large retail and business banking entity, and those books continue to grow. And therefore, the percentages are not the best way to look at it. But we would like that percentage to be going up beyond where it is today. And the absolute numbers, as the bank in total grows, those absolute numbers will also be much larger.
Speaking about corporate and investment, how is that portfolio looking, at least in the half year?
The corporate and investment bank, we are a top bank in this market. We have a lot of experience. We have an incredible team that has been driving that unit. We've previously been more of a debt house, focused very much on the lending side. Over the last few years, we've built very strong transactional capability that allows us to do trade, support import-export business, the guarantees business, and cash transactions, helping customers make payments, collections, tax payments, and we've invested a lot in the technology in that space. And then more recently, we've added the investment banking arm, where you are moving more into advisory, and there are few important transactions that we have participated in, and we see opportunity in that space going forward as well. So we're looking at a fully fledged corporate and investment bank that is also regional in its approach. So Kenya is an opportunity by itself, but it's also a hub opportunity to do business in Uganda, Tanzania, and the rest of the regions.
Interim dividends flat compared to last year. There's a dividend nonetheless. This market is quite tough. Just give us some context around how you arrive at this decision.
You know, the dividend decision is always, a wider decision with the board and other stakeholders. But it takes into account two very important constituencies. One is the shareholder and the ability to deliver return. And as you say, we have consistently delivered return in this market. We've been one of the consistent payers. But at the same time, it's also about investment in the future of the business. So one of the big pillars that we are dealing with is the transformation pillar. It involves investment in digitization and quite a number of things that need to be done in that space. And the dividend game is always balancing those two. And we've done it very well in the past. I'm sure we'll do it well going forward as well.
Okay. Abdi, as we wrap up, this is one of the earnings seasons where at least all the banks we are speaking to are looking back with the context of having engaged their risk-based pricing models as approved by the market regulator. How has this impacted your numbers in the period we're now looking at?
You know, the approach we have taken with risk-based pricing and the way we view it, overall, we view it as a very positive development for the market. And this is especially the case when you view it through the eyes of the customer. Because it's about saying, when you are a consistent client and when you have done your part in terms of repayments and clearances and so on, that over time you should be getting a benefit in the pricing that you receive. And as a bank, as a lender, you also get the opportunity to, rank your risks and price accordingly. So it works both ways, but it really works when viewed from the perspective of a customer.
Okay. Let's close with this, Abdi. We are in an environment increasingly talking about sustainability. We are made to understand that IFRS S1 and S2 will be launched in this country in September, early September, that is. And just from positioning and readiness standpoint, how is Absa handling this matter?
The area of sustainability and the whole idea of being a purpose-led organization and ensuring that the growth you deliver to the market, the growth you deliver to your stakeholders is done in a sustainable manner and in a way that protects society, in a way that looks at matters of environment, social development, governance and ethical conduct, and ensuring that it all comes together is something that Absa is very dear to us. While the regulators have also come in and have provided very clear frameworks for some of the, like for example, climate finance, etc., Absa had started this journey much earlier, and we believe that we're in a very good place. We believe that ultimately, although in the short term there are decisions that you make that are trade-offs, ultimately when you implement a proper ESG framework, it is a positive for the economy, it's a positive for the company as well. So we have a very, very robust framework around ESG. We continue to implement it, not as something you do on the side, but a core part of the strategy of the organization. It sits here at a country level, it's reviewed by the board, but there is also a group component of ESG that we implement together overall as a group. And it's a key part of the scorecard on which all of us, the country MDs, the various leaders in the Absa group are measured. So it's something that is front and center for Absa.
Abdi Mohammed, right on the dot. Thank you so much for your time.
Thank you, Julian.
I appreciate
Thank you very much.
Asante.
All right, so that brings us to the end of Business News. My name is Nina Shaban. After the break, Olive Barrows will be back with more news.